he's stealing customers off of the other crypto exchanges by, in essence, offering near free trading. He's not trying to make money off the trading. He's trying to actually get the assets on his platform, because once he had the assets on his platform, he basically used FTX like his own personal piggy bank. It's like there's $10 billion there. Everybody else is going to get wiped out if their margin positions trade down 20% for a minute, except Alameda. Alameda has God mode. They never get margin called. So in an exchange, you know, like in the US, it's illegal to go more than 50% loan to value. That means you're kind of like, you start with $1 million, you borrow 500,000, you're 1.5x levered. Okay, well, FTX started with 100x leverage, and then they backed it down to the responsible. Well, Sam went to DC, and in addition to trying to get, you know, fairly exceptional treatment just for his exchange, he then started bad-mouthing Binance and implying that the other offshore exchanges were much shadier than his. And that pissed them off, and that pissed off CZ. And so CZ said, okay, well, and that combined with the leak of the balance sheet. When the Alameda balance sheet leaked, and it was clear that something like $12 billion of $14 billion in assets were air tokens backed by nothing.
If you're still wondering how Sam Bankman-Fried created such a black swan event in crypto, in today's video, all your doubts will be gone forever. Michael Saylor, the CEO of Microstrategy, who owns over 147,000 Bitcoins combined between him and his company, will explain everything that happened and how SBF was able to steal and destroy everyone's money. He will also explain what happened with CZ, the Binance CEO, and how that helped close the deal. So watch this video carefully, as this will be a big eye-opener for the future. So how was the scam conceived?
I have 300 million tokens, and then I basically trade it with myself. Like, I give it to you, and you work for me, and you give it back to me. Then I lean on it, so I lever it up 10 to 1. You know, on FTX, you could lever it 20 to 1. Then I borrow your money, you're a depositor, so I take your money, you have $10 million, I lever it up 20 to 1, I have $200 million, I buy my own token, I drive my token up by $5, $5 times 300 million makes me 1.5 billion in collateral. I post the collateral, and then I withdraw $1 billion of, you know, 100,000 people's money. I put it in Alameda, and then Alameda gives a $3.5 billion loan to Sam, right? He gave $3.3 billion to either himself or his personal family holding company. So here's the diabolical twist. I didn't just generate $10 billion of an unregistered security to dump it on the unsuspecting retail. That would take me 500 trading days, dumping 20 million a day, right? He didn't do that. What he did is he generated $10 billion in unregistered security and then just borrowed $10 billion secretly from his depositors, and then went and gambled it, traded it, spent it, lost it.
How?
And that is like, it's particularly impressive. FTX was its own regulator, its own market maker, its own exchange, the issuer, right? All at the same time. This is such a and the hedge fund. Too much conflict of interest. So, but the three constituencies are the VC that put the $2 billion into FTX. They were supporting basically an offshore, unregulated casino, you know, running in opaque fashion, you know, a counter the interest of its own customers. They didn't ask for a board seat. They didn't do due diligence. They were chasing what they thought was insane gains, right? FTX is showing a company that goes from 50 million in revenue to 500 million in revenue to $1 billion in revenue, and they thought they just had the next great thing. So, you know, Sam lies that any con, right, is like, I think I'm getting a deal that's too good to be true, and the con man is lying to me. We're all lying to each other, and so that's the first $2 billion goes down the drain. There's another $4 billion or something like that in just loans made by, you know, crypto industry. I think Alameda borrowed hundreds of millions and billions of dollars from Genesis, from Three Arrows, from Voyager, from Celsius, from, you know, BlockFi, etc. So It's like if you start with this fiction that FTT is a real thing. If I create, again, like yo-yo token, and I manipulate the price up to $10 billion by trading 2% of the float, if you think it's a real thing and I act like it's a real thing, then I pledge it as collateral and you give me real stuff for an air thing. And so there's like $4 billion of that, and they went and they lost half of that. That was part of the reason that Voyager and BlockFi going bankrupt. And the reason that Sam wanted to bail them out is he didn't want to actually have the loans called, right? He was actually trying to buy BlockFi and buy Voyager with FTX equity, which of course is fraudulent and worth nothing. FTX said, we're built by traders for traders, and Sam bragged that they only charge like 3 basis points trading fee, and he was 30 times cheaper than Coinbase or much cheaper than Binance. So he's stealing customers off of the other crypto exchanges by, in essence, offering near free trading. He's not trying to make money off the trading. He's trying to actually get the assets on his platform, because once he had the assets on his platform, he basically used FTX like his own personal piggy bank. It's like there's $10 billion there. Everybody else is going to get wiped out if their margin positions trade down 20% for a minute, except Alameda. Alameda has God mode. They never get margin called. So in an exchange, like, in the U.S., it's illegal to go more than 50% loan to value. That means you're kind of like, you start with $1 million, you borrow $500,000, you're 1.5x levered. Okay, well, FTX started with 100x leverage, and then they backed it down to the responsible 20x leverage, which means that you post $1 million and you can take a $20 million
insane. Okay. Who allows that?
Now, here's the insane. What if I put $1 billion of air token, FTT, on the exchange? I recognize you and I let you take a $10 billion bet. Like, whatever, you took a $10 billion bet, now you withdraw $4 billion of real cash and you use that to buy property and buy everything under the sun. So Sam basically, he scraped billions from unsuspecting investors in Silicon Valley. They should have known better. He took billions from crypto hedge funds and crypto banks like BlockFi and Voyager. They should have known better. And then he took probably $10 billion or more from depositors on his exchange.
Crazy, right? But that's not all. Want to hear what Michael has to say about Sam himself? Just look at the number of crimes he possibly committed.
Sam he's like the 14-year-old kid that stole the family car. He doesn't have a driver's license. He got 8 of his high school friends in the car, and then he found out that there's like $100,000 of cash, a bunch of drugs, and a gun in the car. And then they went joyriding for Saturday night.
Wow.
And the entire thing ends, horrifically with the car wrapped around a tree, half the people high. But he was not ready to drive the car. If he had 30 years of experience, if he was surrounded by 200 good attorneys and accountants and banking credit managers, then they would know what they don't know, and maybe they could have constructed a company that might have managed this amount of risk. No, I'm not going to dump it on retail. I'm driving it to the sky. I'm never going to sell it. I'm going to use it to buy other banks, and then I'm going to drain the assets out of the bank by giving myself an under-the-table loan. It's so much more diabolical than just dumping a shitcoin on unsuspecting retail traders. So yeah, he did it. And he invited that scrutiny, and it was inevitable. He reminds me of one other person, by the way. If you want to know the antecedent, 10 years before Sam Bankman-Fried came along.
Yeah, who's that?
Jolo. If you talk to these same club guys and
not
say
Cholo Fit, this is different.
Who was
Jolo, not J-Lo.
Jolo.
How do you spell that?
Yeah, $1 billion whale. I guess was like Jolo said. Oh, check out 1MDB scandal. 1MDB Jolo.
How do you spell Jolo, Michael?
Jolo.
Just like Jolo.
Okay, so here's what
Malaysia.
Yeah.
Ooh.
This is what happened. 27-year-old guy comes all of a sudden hooks up in a relationship with the Prime Minister of Malaysia, convinces the Prime Minister that they should set up a sovereign wealth fund, and they're going to raise money and invest it for the good of the Malaysian people.
Was the Malaysian president male or female?
Male.
So they're gay lovers.
No, it was Najib. Najib Razak was the Prime Minister, and Najib was in cahoots with Jolo. Jolo ended up raising $14 billion. And the way he raised it was he sold fraudulent bonds.
And that's not all. If you have been following Michael Saylor for a while, you know his opinion on tokens and crypto issued by companies. According to Michael, those should be regulated like any stocks since they are securities, not commodities like Bitcoin. So, Michael will also explain what happened to all other crypto companies that blew up and how that he was expecting that to happen to FTX as well, since it created tokens out of thin air.
Now, FTT or Serum, if they had been attacked by anybody, the entire thing goes up like a house of cards. So I think if you look at all the blow-ups, right, Celsius, BlockFi, Do Kwon, Luna, Terra, Three Arrows, Genesis, and FTX, all of them were going to blow up at some point because, like Luna, Terra, it was $20 billion worth of a stablecoin backed by $2 billion of real assets, and a $50 billion Luna thing that had $50 million a day of real liquidity. So they were all running on 100x rehypothecated leverage, and they were going to blow up. It's just a question of when they're going to blow up. I think that this is it's a painful deleveraging of the entire industry. But if you look at everybody that was kind of behaving badly, like doing stupid things, like again, aggressive lending in the real world is 1.4 leverage. That's insanely aggressive lending. These guys were all running at 20x, 10x.
That's insane
leverage.
to me.
So you had a lot of people behaving badly. They were destined to blow up. It might have been held off for a bit, but I have seen pretty credible evidence circulating in the Twitter sphere that Alameda had already taken a $3 to $4 billion loss in 2021 during the bull market because they were just doing stupid things. They were counterfeiting money, and then they were using the counterfeit money to steal other money, or either to steal it from their deposit or steal it from their investors or steal it from creditors. Then they were funneling that into the political and the marketing process. And that's why you saw them on the Super Bowl ad. That's why the FTX arena was named after them. That's why every celebrity is getting sued right now, right? If you can, what business is better than counterfeiting money as a business?
Right.
Okay, so what burst the bubble here? Well, this can't go on forever. And in D.C., there's a war over whether or not the SEC should regulate crypto or whether the CFTC should regulate crypto. So Sam supports a bill, the Stabenow-Boozman bill, and they give huge amounts of money to politicians. And if you read the bill said crypto will be regulated by the CFTC.
What's the CFTC?
The Commodity Futures Trading
Okay,
Commission.
gotcha. We know what the SEC is.
Okay, the
Securities and Exchange Commission.
CFTC would regulate if you were trading soybeans or pork bellies or
Commodities,
oil or
anything
Come on.
commodities. Got it.
Okay, a commodity is an asset without an issuer. Okay, a commodity is a much more ethical thing to promote and to trade than a security. A security is yo-yo coin or penny stock. I invented it. The difference between a security and a commodity is if I looked at you right now and said, you know, I don't like people in Japan, I'm just going to turn off all their steel. I can't do that, right? I can't make steel not work in Japan. I can't turn off electricity in Japan or turn off oranges, right? So a commodity is an asset without an issuer. No matter how much money you have of pork bellies or lumber, you cannot invalidate somebody else's lumber.
And in case you still have questions about the difference between securities and commodities, Michael does a fantastic job explaining.
Because they're again, it's land, right? If I said to you, buy land in Texas, and I was wrong, okay? It's like I didn't create the land in Texas. I can't remove the land in Texas. But what if I said, buy Texas coin? There's only 1 million Texas coins. It's going up. And then you buy Texas coin. And then I go and I give myself 10 million more unlocked Texas coin. I dump it on the market. The price goes to zero. Now, do you feel like you got cheated? Mm-hmm. You see how it's possible to cheat you with a security because I can manipulate the characteristics of the security. A security is an asset with an issuer. So if you have an asset with an issuer, like for example, a publicly traded stock, like MicroStrategy, MSTR is an asset with an issuer. I have ethical civil obligations, right? You know, if I lie about it, I can't just say, I'm not going to say what I'm going to say, right? I don't even talk about it. I wouldn't tell you to buy it or not buy it. I would say, read our disclosures. There's 1,000 pages of risk factors. Everybody on the board of directors, everything we've done, everything we think we're going to do. If we change our mind about what we're going to do, you're going to read it in an 8K within 4 business days because I have an obligation to be transparent on a security. But on the other hand, if I say, I really think you ought to stock up on lumber in case, you need to burn it this winter. I'm promoting a commodity. Maybe you stock up on lumber and you overpay for it. Maybe you stock up on lumber and you don't need it during the winter, right? Did I defraud you? I'm promoting lumber. Maybe I gave you bad advice, but the difference between promoting lumber and promoting lumber coin is I can print 100 trillion lumber coin on Saturday night and dump it on you and drive your lumber coin to zero. I can't create 100 trillion forest overnight by snapping my fingers. It's a natural phenomenon. Mm-hmm. Crypto commodity is a token without an issuer that cannot be manipulated by some CEO or corporation or other party, right? There are cryptocurrencies like Tether and Circle. They are actually tokens meant to represent the US dollar or some other stable asset. They have an issuer. And generally, they're going to be regulated as securities and as currencies by the banking establishment, the SEC. Then there's crypto securities. Solana, FTT, Serum. Those were all securities. They had an issuer. There were companies behind them. There were CEOs behind them. People could make more of them. People can destroy them. There are some people, insiders, that had disproportionate interest in them. Those could only be ethically sold to the general public pursuant to a full and fair disclosure, right? This is common sense, right? If you create something and you dump it on the general population, you have an ethical obligation to tell them who made the decision, how much is there, what is your background, what's going to happen next. That's what you do when you take a company public. So coming back to this crypto issue, you had a little war between the two factions. And the right answer is, if you're selling a crypto security, it should be regulated by the SEC. If you have a crypto commodity, then it's not a security. Now the question is, what's a crypto commodity? The chair of the SEC has said the only crypto asset that's clearly a commodity is Bitcoin. The chair of the CFTC had said, as of a few months ago, the only crypto assets that are commodities are Bitcoin and Ether.
So, to close in, what brought FTX down and made the collapse happen?
The thing that brought FTX crashing down is that Sam went to D.C., spent a lot of money on lobbyists, lobbied for this bill that would have made both Bitcoin and Ethereum commodities and would have put the CFTC in control, would have created light regulation, would have created a path for other crypto tokens to be viewed as commodities. And in addition to giving a lot of money to the media, a lot of money to the academics, a lot of money to the politicians, and a lot of money to the celebrities, he also inserted in the bill that the crypto exchanges would send fees to the CFTC. And they, in essence, try to bribe the CFTC with crypto usage fees in order to get light regulation. That didn't go over well with a whole set of regulators that thought that was a way to undermine the securities industry. It was at a deadlock. That's why we haven't had any regulation, because of this deadlock between, I think, people that know better. And look, the crypto people have They had billions of dollars of counterfeit money. Sam alone spent billions of dollars of counterfeit stolen money. But imagine if everybody that was generating crypto tokens doing the same thing right now. And I'm not going to go into the others involved, but you can probably figure out what's going on. Well, Sam went to DC, and in addition to trying to get, fairly exceptional treatment just for his exchange, he then started bad-mouthing Binance and implying that the other offshore exchanges were much shadier than his. And that pissed them off, and that pissed off CZ. And so CZ said, okay, well, and that combined with the leak of the balance sheet. When the Alameda balance sheet leaked, and it was clear that something like $12 billion of $14 billion in assets were air tokens backed by nothing, it became pretty clear that they were rickety. Imagine if I said I have $12 billion of air token, it trades $10 million a day. Okay, well, all you got to do is dump $100 million on the market. It's going to zero. The most influential person in the industry is CZ, but worldwide, I think the most influential person in the industry is the chair of the SEC. And the entire, Gary Gensler, and the entire industry pretty much is waiting to see what Gensler will do. And Gensler is pretty much the one person who could provide a playbook, or a set of rules of the road that would cause this industry to move forward in an economically responsible, ethical fashion.
Did you enjoy this interview? Want to see more daily crypto videos like this to help you get more profits while protecting your wealth? Just let us know in the comments below. And please remember to leave a like and subscribe so you don't miss any updates. Thanks.